Greetings, Money Savvy fans. On this week's episode of Money Savvy Woman TV, we're going to be talking about mutual funds. So grab your paper and pencil and let's get started. Now, I bet you didn't realize that you could actually pay taxes for capital gains when your mutual fund has actually experienced a loss. Shocking, huh? Yeah, I know. Let me tell you how that happens. You've been paying for the expertise of the fund manager, and during the course of the year, he's been or she's been choosing securities that hopefully have performed well. And in that case, at some point, he's going to sell those securities so that you can actually experience the real return, which is more money than you purchased it for. And you will pay what they call a capital gain on that. And there are going to be some funds inside that mutual fund that aren't going to perform well, and that's when you experience the loss. So if your mutual fund at the end of the year overall has experienced a loss, that's not what we enjoy. We don't like that. But still, some of the securities inside that mutual fund did perform well, and on those you will pay capital gains. So this is what happens when you have to pay the capital gains tax inside the fund at the end of the year. Now, why do I bring this up? Because you don't always realize it. People don't always tell you that you will pay that actual capital gains tax. You'll get a little byline on your statement that says capital gains tax, and it'll show amount that you've paid, and it's not always fun. It's not always enjoyable to get that money taken out of your fund. So you have the right to sell that position or to sell your mutual fund before that is charged to you, especially if overall the mutual fund has not performed well and you really don't want to keep it. So sell it before you actually get charged that. You can find out from the investment company that holds the mutual fund or from your advisor who's helping you manage your portfolio when that will happen. So I am advising you right now to do that quickly because it should be happening any day now, if not within the next week or so. So don't lollygag, as my mother would say. Take some time to look at your statements pronto and make these moves quickly, because they'll generally happen around the 15th to the 18th of December, and you'll want to make sure that that doesn't happen to you. So look at look at your mutual funds, see which ones are not performing well, and then make the decision if you want to keep them for the long haul, because if you do, you may have to pay capital gains rate on them, and if you don't want to keep them, sell them as soon as possible. Okay? That's your Money Savvy tip from Money Savvy Woman. Have a great week, you all. Talk to you soon. Bye.